Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our belief cards. This is by James Garner. Believe in yourself and everything you can be. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We have the Dow Industrials up 103, NASDAQ up 39, S&P's up 13. Can you say ABC down, folks? Because that's what we have happening here. Going to be wild watching this baby shake out. Gold contract down $4, trading at $1,225 an ounce. Silver off 12 cents at $17.06. Platinum down $2 at $1,239 an ounce. Copper up 2 pennies at $2.93 a pound. Light sweet crude down $1.23, trading at $59.75. That baby's on its way to $55. Wild. Bonds, 10-year down 7 ticks at 126.27. 30-year up 3 ticks at 144.01. Both of those folks are going to the October 15th swing highs. Big numbers, low yields. King dollar. Now check this out. This is going to be wild. We're going to bisect and dissect this king dollar because this is what you've had. King dollar is up 408 ticks. With king dollar being up 408 ticks, they couldn't move the gold market. They couldn't move the bond market. They moved the Dow Industrials. The Dow was up 200, NASDAQ was up 80. Right now, you're only up 100, and you're up 40. Bottom line, what I expect you're going to see as we come into the close, you're going to see more selling. What do? You get the A to B set up on the way down. You got the B to C set up today. This is going to be a nasty, nasty market on the way down, folks. These counter trend bounce, they can't hold. Intraday, it was on dramatically lighter volume. I'll show you on the S&P. The S&P future market, when it was testing, all it was doing intraday was testing the high of yesterday, and it was doing it with 22,000 contracts versus 77,000 contracts. See ya. Don't want to be ya. Euro down 66 ticks at 123.87. The yen up 1.32 at 119.20. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Your A point up here, folks, is the high that was generated last week at 2079. Your B is yesterday at 2024. So what you have happening out there, you get a 56 A to B. That's your C point, I suspect, is today. That's going to bring you down to 2,000. And right now we're 2038. The next leg down, and you're going to see it tomorrow, is coming to the highs that were generated out there in September. That's how that's set up on the cash S&P. We go to the Dow Industrials. We take a look at the Dow Industrials. What do you have with the Dow? Dow Industrials, you're up $93 right now. We're up 200 earlier. The A point on that is the high, which is 991. The B is the low of yesterday, which is 629. So you get about 350 points there. And when you deal with that, we're talking about a 17,350. That also is going to be bringing it back to the highs of September. NASDAQ Composite. You take a look at the NASDAQ Composite. The A point on the composite is the 4810. Your B is a 4674. So with that, 47, 48, 135. That brings you down to 4759. That's going to bring you to the 4610 level. Oh, man, they all line up. This is really cool. So check this out, folks. So the way that we're lined up right now is this, and this is deviance, no doubt, but this is what you're hearing off of me is this. The deviance in the marketplace when there's turns like this in the market is that you normally get a downdraft, you get that counter trend bounce. In this case, now today, this is unusual that you can get a counter trend bounce so quick again. What wasn't unusual is that got sold off so quickly. Why? Because the monsters that are selling into this market, folks, are huge. If we go over to the E-mini, I'm going to show you, if you happen to be watching Tiger TV, you're going to see it on the TV. If you're not watching Tiger TV, you're in the car, I'm going to explain what you had happening here. So yesterday at 9:50, as the market starts going south, the market was going south, folks, from the price point of 2053. First leg down, you had, this is on a 10-minute chart. First leg down, you had 77,000 contracts traded. Next leg, 77,000. What do we do this morning? This morning, you go up fast, furious. The first leg up that took you to 2043 had, sorry, folks, excuse me, had 100,000 contracts, which is nice. That's a good acceleration up. That was certainly a counter-trend bounce. Right after that, from 10 o'clock on, the volume was dying on the vine. It stayed up at the high levels from 1040 going all the way over to 110. At those levels, what it was doing was testing the level from 950 yesterday, and it just couldn't get any juice. When we're talking every 10-minute buy, you're talking about it. As you went through the day, you had 56,000 contracts. Going into it, 44,000 contracts. Then watch how this drops off. 36,000 contracts, 25,000 contracts, and when it made the high, it was 18,000 contracts. Your correlation was 18,000 contracts going against that 77,000 contracts. That's where the market gave it up. That's where the selling start producing some big numbers coming into it. And what I expect you're going to see coming into the close out here is more selling. Right now, you get the Dow up 115, Nasdaq's up 45, S&Ps are up 15. What's going to be unusual here, there's no doubt about it, if in fact we get that selling that takes place, is that is going to accelerate the selling for the next 7 business days, because that's all we really have before you basically get into that holiday season. Now, let me show you something else, because this is crucial to understand also inside the S&P. If we take a look at the S&P, the cash S&P, what we've done thus far is this. The first break inside this, okay, so the first break of the larger trend line that will bring it down to, actually bring it down to 1340 on the S&P. The first break came the week of October 3rd. You broke that, broke it with conviction, wide price spread, accelerated volume, all of the above. S&P cash goes from 1219, gets down to 886. Now, what happened there is that you go right back inside the channel line. It's like, okay, it was a failure, because back inside it. Well, where we are right now, folks, we're banging on that channel line right now. That's what we're doing. A break of that channel line with conviction, mind you, a break of that with conviction does 2 different things. Number one, it says, first off, you're going to go down to this 1912 to 1820 level. Both of those levels, the 1912 is the high of that week of October. The 1820 is the low. That's the first part. The larger issue, folks, is that break of the channel line, then that sets up much lower prices. And I expect that's exactly where we're going. So this is going to be wild watching this whole thing shake out for the next couple of days. Volatility, yes, we have it in spades out here. Now, let's go over to the gold contract. Gold, this is about as good as, if you're a gold bull, folks, or if you're in the metals market, this is about as good as you're going to get. And specifically what it is this. We pulled back today to 1216. Rejected lower price. We're at 1225. We've done 133,000 contracts. That 133,000 contracts is going against 241,000 contracts from Tuesday. And it's going against, this gets even better, it's going against 342,000 contracts, which was the huge sign of strength on December 1st. Now, if that's all we had, you could put your hat on that. But that's not all we have. Now, if we go over to the dollar index, and you want to see something that is absolutely bizarre, the dollar index turns around, goes topside today, has, and this is, watch this, so this as we bisect and dissect this, you're going to be able, this is really deviant too. So, intraday today, folks, okay, before the broad markets opened, the dollar went to 88.10, I think. Yeah, 88.19. We got down to that level at 3 o'clock this morning. But realistically, the index itself gets liquid at about 8:30. We have 70,000 contracts. What the dollar has actually done is it went to a lower low with volume. That is saying, guess what? That dollar index is going to be right back downtown, and the gold market is screaming that because the gold market should have got smoked as the dollar went up $400. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You get the Dow Industrials up 33, Nasdaq up 47, S&Ps are up 17. And as we do each and every Thursday at 20 past the first hour, we get our man, Mr. Andy Hecht. Don't forget, folks, every Tuesday, Thursday, right here at TFNN, Andy has an outstanding show right after my show ends, 5 to 6 Eastern Standard Time. And don't forget, all the programming at TFNN you get right on your cell phone, TFNN.mobi. If you'd like to get Tiger TV, you get the audio, the video, just go to TFNN.com, hit the TV on the top right-hand corner. You can get the audio plus the video. Andy also has an outstanding newsletter. It's the Technomento Commodity Report. You can test drive that right now, right here. Go to TFNN, you go to newsletters, you go to trading newsletters. You can test drive the Technomento Commodity Report 30 days, absolutely free. Andy Heck, what's going on?
How you doing there, Tom?
I'm doing great, man.
Good to see you.
You too, man. It's a beautiful thing. And, you know, folks, if you haven't seen this yet, man, Andy Heck is also up on HD video now. It's a beautiful thing. You can throw dots at him.
Exactly. You could throw socks at me, whatever you like.
That's a beautiful thing.
So Tom, very interesting thing. I've been doing a little work this morning. I wanted to point something out to you and to all the listeners out there. Gold closed 2013. The close right now, we're down 0.98%, so just under 1%.
Okay.
The U.S. dollar closed 2013 at 80.955. We're up 9.5% on the year. Gold has performed very, very strongly so far this year. And the question now becomes, is the dollar strong, relative, is it just like really fundamentally strong, or is it just strong relative to other currencies? Because what gold is telling us is that relative to gold, the dollar is not that strong.
Well, yeah, no doubt. And, you had brought up the point the last time we were talking on Tuesday, Russia, and what's going on, folks, is that in Russia right now, the ruble has got whacked beyond belief. They've lost billions of dollars, and what is happening is that Russians in general are buying every car they can get their hands on, because what ends up happening when your currency is getting destructed, cars at the beginning of the destruction are a great deal because the manufacturers themselves have not gone up on the price. So, next 2 or 3 months, there'll be no cars to be bought in Russia. The newer cars coming in, they'll raise up. That being
Absolutely.
said, what Andy had said is that, guess what? They're just not cars. And I agree, man. I suspect they're into the metal market in a big way. And it have to be, because the bottom line, Russia, if you don't know this, folks, what is it? But it was like 16, 18 years ago, right? You could have $100 million in Russia, and the next, 4 months later you were broke, right? If you were in rubles.
Exactly.
Yeah.
Exactly.
Broke.
And I suspect it's a lot of tangibles. I bet you artwork also. I bet things that hold value. That's why I think, and they're following, the Russian government has been a big buyer of gold this year, the biggest buyer of gold in the world. And I think that the oligarchs certainly, but even the Russian middle class is scammering now to buy gold, silver, platinum, anything that will hold value.
No doubt. No doubt.
And they're small. It's easy to buy. It's easy to store. So
and you know what? Yeah, that's right. And it doesn't have to be a lot. Even if you just talk an ounce or two, you'd be really in shock, folks, if you realize what an ounce or two, just citizens buying, what that does to the gold market. The gold market is tiny. It's tiny.
Exactly. And the price of gold in ruble has exploded.
Right.
So, hey, I have another thing I wanted to point out today.
Yeah.
Can you put up a chart of the Mexican peso?
The peso.
Probably looks pretty lousy. But I picked this up. I just wanted to throw it out there and see what you thought, Tom.
Okay.
The Mexican, I saw an interview with the Mexican finance minister. And it turns out, first of all, let's start by saying Mexico is the 10th largest producer of oil in the world. They produce about 3 million barrels a day.
Okay.
The Mexican finance minister said that Mexico, a couple of months ago, hedged 100% of their oil production for 2015 at $76 a barrel.
How cool is that? Wow.
Now, I think that might be a very interesting. I want to see how that ties into the Mexican peso, because the Mexican peso could be a very interesting.
What do you think the symbol is? You have any idea?
Oh, I don't have it, and I don't have it on my charts on CQG. I wanted to take a look at it.
I'll get it. I'll get it in a break. We'll get it.
Okay, no problem. Take a look at that, because hey. Listen, oil's trading at $59 and change here. These guys are hedged out at 76. They might be the smartest guys in the oil market.
Yeah, no doubt. Yeah.
I think someone in the den's asking, how did Mexico know to hedge at 76? Well, maybe they saw it coming down. He knows the answer. Maybe he'll put it up there for us. I would imagine that they always hedge. And, look, some years it's good, some years it's bad. this hedging, but I think that they might come out smelling like a rose this year.
Yeah, no, I think they're going to. I think they're going to.
Very, very interesting. The other thing I wanted to point out is cattle. Cattle has turned. I think the cattle market's going to come off.
Okay, so let's take a look. And that's good. I get the peso, too. Our man Dave White gave us the peso.
Wait, where do you want to go first? Peso or cattle?
No, you can go to cattle first. We got
All right,
that.
we'll go to cattle. You know, cattle has dropped since November from 173 a pound down to 163 a pound. We're a little bit below that today. Today, the feeder cattle, the more speculative feeder cattle cash settled contract is down the limit, down 3 cents at 228. You know, we're in off season now.
Yeah.
Every dip in cattle has been a buy so far this year, but these prices are sky high. In beef, we could be seeing some demand destruction. Hog prices have come down.
No, I can see it. This looks like an ABC down. So 173. Yeah, it's a good one too.
Yeah, I think 145 or so.
Yeah,
is in play.
13, yeah, 150's next. Yeah, that's cool, man. Yeah.
Okay. Yeah, so just keep that in mind. That's good. Maybe steaks and burgers will get a little cheaper as we come into grilling season.
No doubt.
Long way away. We got to go through the winter first.
It is
right,
a long way away, totally, man.
It's a long way away, but things go very quickly.
They do, man. They absolutely do.
Time goes by so quickly. So let's go back to this peso. I'd love to get your technical read on it.
MXN. Let's go take a look at the peso. So the peso's gone from 13 to 14.75 in 3 months. So this correlation is as this goes higher, it's getting weaker against the dollar, right?
Right.
Okay, cool. So now we got, let's see, 11.90, 12.90, 13.90. What I'm trying to figure out here, folks, is that where the expansion has already gone. So it was $1.80, which would give you 14.80, and now this is interesting. We're at 14.76.
Wow.
Now that's only an A to B equals C to D, though. What normally would happen on this type of deal, I think, is that it's going to go over that price point. You know, there's really not something you do at this particular point.
Maybe it's a scale up from above the price point.
Well, what you would do, I suspect first this is going to go like 16 or something, right? Then you get a pullback. Because what you have here, folks, is that the last 3 weeks have been like explosive, meaning how much weaker it's actually got.
Yeah, I mean, there's a lot of civil unrest in Mexico. There's a lot of other things, filling into that. But, hey, if they hedged oil at $76, they're going to be looking good.
Yeah, as long as the bureaucracy doesn't just take all the money.
Well, that's always the problem.
You stay right there, folks. Andy and I are coming right back. Dow Industrials are up 140 right now. Nasdaq up 47. S&Ps are up 15. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Excuse me. There we go. We hit the Dow Industrials up 120 right now. Nasdaq's up 42. S&Ps are up 15. We're talking with Mr. Andy Hecht. Don't forget, folks, that Andy does a great show here every Tuesday, Thursday, 5 to 6 Eastern Standard Time, right after I get off. Also has an outstanding newsletter. And, you know, the whole world has been talking about oil. And, you know, Andy basically was sitting right next to the largest oil deal to this day in the world. In fact, that's what we want to talk about right now. And from one Andy to another Andy Hall.
Oh boy!
I know. You know what's so cool, man, is that he's been all over the news. And if you don't, what happened, folks, is that this guy. What was really crazy is that it was at Lehman Brothers, right? It was at no, it was he was at Citigroup, right?
Citigroup, Salomon Brothers.
Yeah. So he was Citigroup at one point, folks, during the financial disaster. And this is how crazy some of the bureaucracies are. That the guy made like some outrageous amount of money for Citigroup. Then they didn't want to pay him.
$4.4 billion.
How much, Andy?
Since 1997, 4.4 billion.
Oh my
I think.
God! And they didn't want to give him $100 million or something, right?
Yeah. I mean, in a year that he made a lot of money. His bonus was probably like 98 or 100 million. They didn't want to pay him because of the pressure from Congress.
No, I know, but that's how sick it is. You know what's so crazy about that? I remember maybe about 10 years ago, there was a money manager at Harvard, right? Same deal happened. The guy's making hundreds of millions of dollars for Harvard, and then the elite at Harvard decided that he was getting too much money. I was like, what are you, crazy?
Of course, pay for performance.
I know, man, unreal. So, you know, when we do talk about him, okay, the reality seems to be that, well, no, not the reality. The news stories seem to be that, okay, he is long oil. But the fact of the matter is that he might be long oil, short oil, long currencies, because he's very sophisticated in how he trades, right?
Exactly. And, you know, I wanted to go through it a little bit for the listeners here, what I think happened here. You know, Andy Hall has been pretty outspoken saying that, you know, he thought that the whole shale thing was a very short-sighted, very short duration type of event.
Okay.
And he was buying deferred contracts, and I'm going to put up a chart here.
Okay.
Then of the this chart is of the January 2008 versus January 2005 crude oil spread. So back in June, this spread was trading at a backwardation of just under $15.
Yeah.
Okay. So that has moved from negative 15. In other words, the nearby more expensive than the deferred.
Yes.
To about $9 contango. So that's a move of $23. Now, oil has come down like $45, maybe a little bit more here. So that's only come down half. What I think Andy did was, Andy was buying deferred contracts back in, I guess, April, May, June.
Sure.
And what he was doing, Andy never trades one way. He's a big proponent of what he calls the front-to-back spread.
Yes.
Meaning you're long one, short the other. Sometimes you're long the front and short the back.
Okay.
Sometimes you're short the back and long. Sometimes you're short the front and long the back.
Okay.
Right? Back, just to give you a little historical perspective, back in 1991, when Saddam Hussein went into Kuwait,
yes,
Andy was long nearby oil at $20 a barrel.
Right.
He was short deferred oil at about $21 a barrel.
Yes.
And when the Iraqis walked into Kuwait, nearby went to $40 and deferred went to $20. So he made $1 on the deferred, but he made $20 on the near term, and he put about $500 million in the bank.
It's amazing, because I remember the story you told us about that there was a trade of folks that had gone long the deferred, thinking he was going to make a fortune, and he called up thinking that he made a fortune, and in fact he lost money, or 50 cents.
Exactly. Oh, he was not a happy camper.
That's sick. That's sick,
but
man.
The market is the market.
Right.
Anyway, this time I think he did the opposite trade. What he did is he bought the deferreds.
Yes.
And then he sold nearby. And then as the price fell through technicals, you know, Andy is very much a scale-up buyer, scale-down seller kind of guy.
Yes.
So as the price started falling through support levels, he leaned into the nearby, selling the nearby, selling the nearby, selling the nearby. And I think that what he might have done is when he was buying these deferreds, he might have been buying from some European oil producers, like in Norway and in Europe from British Petroleum and some other big oil. And he might have been buying in foreign currencies, which meant he went long the dollar.
Wow.
Because he owed the foreign currencies for this oil. So I think that that's kind of, and then he probably had a long dollar position too.
How cool is that, right?
Technically. No. But I think he made it, you know, he lost a little bit on his deferreds.
Sure.
But he made a boatload. And as it came down, as it broke through 100, as it broke through 94, as it broke through 89, he added and added and added. And now, you know, that's a winner. You know, he was up 1% in November. But in December, oh, my God, they must be just printing money over there.
Yeah, right. No doubt.
So very interesting. It's kind of his style of trading. You know, everyone, I think when oil started coming down, everyone was like singing his death knell, saying, oh, my God, this guy's getting blown away because he's long oil. But no, the man trades front-to-back spreads, and this is where he cleaned up this time. And that's basically the way his trading strategy has worked, as I know it. I mean, he could have changed it.
No, cool, because then the reality would be that inside that trade, then he's going to flip that trade when he thinks that is whacked out, meaning that...
I would say, I would tell you, Tom, I bet you he's flipping it now on a scaled-down basis. Take a look at this chart. This chart says it all. A 4-year oil chart that went from a backwardation of almost $15 per barrel on the nearby to a contango of 9, a massive move in the spreads. And that's one of the things I always try to talk about on my show with you, that when you look at the nominal price, the nearby price, it's only a small piece of the story in something like oil.
Yes.
It's the market structure. It's the spreads. It's the way one period trades versus another period. It's the way the products trade. This all goes into the oil market, much more than just, hey, oil was 107, now it's 59. There's a lot more going on there than just the price.
You got to love it, man.
Yeah.
Totally.
Well, it's an amazing thing. Hey, another thing can you put up a chart? Can you take a look at what Delta Airlines is doing?
Good old Delta. Let's
look at Delta. Let's look at Delta versus the rest of the airlines. And the reason I bring that up, Tom, is because Delta Airlines bought an oil refinery last year.
Right. Oh, my God.
Let's see how they're performing. I mean, that might be a great pairs trade. Long JetBlue, short Delta.
Yeah, no doubt. Let's see. Yeah, so on Delta, it's been a nonstop run from $8 to $48. And I'd say that, I mean, you're at $48, and Delta wants to go to $40 first off, and has a high volume swing low at 30. So 30's game here, man.
They can't be loving this refining business. I mean, I know jet fuel is okay. It's better than gasoline here. But these nominal prices, the crack spreads are not that strong. Heating oil is picking up a little bit. The heating oil crack is up and around. And that's, when you look at refining stocks, it is a crack spread trade because all refining companies are processors of crude oil into oil products. You have the heating oil crack is up at around $26. That thing should be north of 30 coming into winter. You have the gasoline crack down at $8. So very, very depressed.
And, well, you know what? Delta's history, folks, if you want to hear something really bizarre, not that you just shot the stock on this, but Delta, on the run-up from the lows of oil of $35 after the crash, was it before the crash? Let me think this through. 1 second. No, I think it's after the crash. But bottom line, Delta had hedged oil and bought oil, diesel fuel. And that's how they stayed alive, Andy, for another couple of years, because they sold the hedge. Right. And if they never sold the hedge, folks, this was actually before the crash. This was before the crash, because this is when, this was before the crash when oil was running up to $135. They had sold it, and they had only made like $10 on the sell, but they had so many, barrels of it, they made a fortune. And in that context, then, of course, oil ran to $147. Now, in that same context of where Delta went in and bought that refinery right at the wrong time, boom. So that brings the probabilities up even higher that they did it again.
I would
Isn't
bet dollars I would bet dollars to donuts. An airline does not belong in the oil refining business. I mean, it's one thing if they hedge. Hedging is fine. Running a refinery, Tom, is a very capital-intensive business.
Yes. Right.
And you have to be there through the peaks and the valleys in this thing. I would imagine that Delta, because of that oil refining business, might underperform other airline stocks. I mean, I like the airline stocks here. You have to with lower oil prices. But Delta, I'd be very wary of.
Listen, folks, 5 to 6 Eastern Standard Time, right here tonight. I'm man, Mr. Andy Hecht. I was just going to call you Andy Hall. I think we got to. It's a beautiful thing. Hey,
that would be a compliment.
There's no doubt, man. Hey, Andy, have a great one, safe one, and look forward to the show this afternoon.
Talk to you later.
Stay right there, folks. Come right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report, that's 14 months, for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now are up 54, NASDAQ up 21, S&Ps are up 750. And as you're over at our website at TFNN, folks, you're going to see right on the top of the carousel, I have a gold report special going on right now. Next Tuesday, this coming Tuesday, is the 660th edition of the Gold Report, 12 and a half years. You can get 60 editions of the Gold Report for only $600. It's $10 a week. What you also receive is you receive a copy of my book, The Art of Time in the Trade, Your Ultimate Trading Mastery System. That in itself is an $88 value. That'll be autographed, sent out to you ASAP. If you happen to want to be in the metal market for the next 60 weeks, if you're in it right now, if you have Tiger dollars, all of the above, you have another 6 days, 5 days in order to get that special. So check it out on the front page of TFNN. We've only done this once before, and it's a 50% savings. Okay, market-wise out here, folks, get the cream cheese out because the market is toast. It's an ABC structure on the way down. They're going to sell into this, and they've been selling into this in a pretty incredible way. Dow had been up 200. Right now, you're up 34. S&Ps, the S&Ps are screaming, folks. I mean, screaming in an extraordinary way. When I started the program, I was showing you specifically what it was going into. It was 22,000 contracts going into 77,000 contracts. Couldn't handle it. The selling on the way down right now, they got it going. The last 10 minutes just had 44,000 contracts. It's going to be, bottom line is that just up 5 now. What do we have? You got 8 minutes coming into the close. They can get the Dow. They can get the Dow flat. The S&Ps, we'll see whether they get the S&Ps flat. Bottom line, that's going to be an ABC structure on the way down. And the definition of an ABC structure on the way down is this: you go down with volume, you go back up with lighter volume, you come back down with volume. In the S&P right now, I'll use the SPY for the correlation so you can see how this correlation shakes out. What you have is that we moved down with 159 million shares. You went up today with 137, didn't hold price. Nice ABC structure on the way down. We're 203.90 in the SPY. The first price projection in that will be 200. We go to the 3 Qs, and you have conformity right across all the indices, by the way. If you go to the 3 Qs high today was 105.04. We come down with 46 million. You go up with 43, couldn't hold price. That is also an ABC structure on the way down. We go to the diamonds, the DIA, which you have with the diamonds, same setup in the diamonds. Diamonds had been as high as 177.66. You're at 175 right now. You're down with 7.9 million. You're up with 5.9, and none of them, of course, holding price. That's a big number. It's particularly a big number because we're on a Thursday coming into a Friday, coming into one more week of trading. Gold, oh, ahead. No, let's go to the dollar next, because what the dollar has been screaming is that, you know, the dollar was up some big numbers out here today, folks, and then it couldn't hold price. Well, when I say it couldn't hold price, they just start selling the dollar off again. It's what I expect you're going to see is this. The dollar at 0.300 this morning was down at 88.19. 70,000 contracts. What that sets up, it's a lower low. Having contract, that's where the dollar wants to go. Gold wants to go top side. Gold is building cause to get up to that 1350 area. Silver right now is running out at, okay, so SSIH5. 2015 is coming at us. Oh, I like how silver's setting up too. Interesting. So silver's setting up to make that run up there to the, the first run would be 1782. You get 1782 with juice, then that thing's going to see the $21 level. Bonds, of course, want higher price. What we have here is this. This is which is absolutely a different correlation than the 2008 level. The 2008 level, folks, everything was going south because everything was at highs. This correction here, what you have happening is that the dollar wants to pull back. Gold and silver want to go higher, but they've had a correction in an extraordinary way. The correlation is about as direct as you can get. Gold, silver, up. Bonds up, yields down. Dollar, pull back, S&P, Dow Industrials want to go south. The S&P, what you want to wrap your head around here is on the S&P, the channel line that has been developed there for quite a while. If that channel line breaks with conviction, we're not only going lower, that'll be going dramatically lower. The first break of the whole uptrend since the 1350 S&P occurred on the first and second week of October. That broke down, had the volume, and then what it did, it went back inside the channel. So that first one was a failure. It's starting doing it again. And if you know anything about how channel breaks occur, you know, when you first off come back inside a range, yeah, it can go dramatically higher. You come back down inside that range, in this case, in the lower range, it's going to be fast and it's going to be furious. Now, just the opposite happens. If we had gone down first and we go top side and you get back inside that range, guess what? It's fast and furious on the other side. So volatility is in spades. You can expect that volatility to continue each and every day. Some of the Dow stocks, the Dow stock that's going to whip people around in an extraordinary way, folks, is going to be Big Blue. Big Blue is just building cars in an extraordinary way. We did 3.5 million today. Big Blue wants to basically break down underneath this 160.05. Big Blue gaps down 10 points or something because the longer term on Big Blue wants to go to 116. 157. So Big Blue right now is trading at 160. 157 would be the first stop on the way down, meaning that's where it wants to go. You break that, 116 is in the making. 116 is like insane. Okay, bottom line, that is some heavy points in the Dow Industrials. Not sure what's going on with Boeing, but Boeing is taking some heavy heat with volume. Boeing in 8 days is down from 135. It does have that high volume spike low at 116. That's where it's going. You know, so the selling is in the indices. It's under the indices. It's all of the above. The King dollar is what you want to keep your eye on in an extraordinary way. Bonds are basically going higher, and it looks to me like they're going a lot higher. We're at 2.1 right now at the 10-year yield, and that is still wicked expensive compared to what France is paying. France is paying 0.9%. You get Germany paying 0.6. Spain is paying 1.9. We're paying 2.1, and Spain's paying 1.9, and they're broke. It's like, really? This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials right now up 58. NASDAQ up 24. S&Ps are up 8.5. We'll be right back, folks. Folks, this is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is one of our Believe cards by Colette. Hope cost nothing. Market-wise, let's take a look at it out here. The Dow Industrials finished up 63, NASDAQ up 24, S&P's up 5. Each one of those, folks, is an ABC structure on the way down. What we had out here is this. Dow Industrials were up over 200 points. We did light volume. The Dow, high of the Dow today was 17,758. Bottom line, we closed at 596. Gave up big numbers, big numbers. Light volume. So what do you have here? You got an ABC structure on the way down. Your A point is 991. That was the high that was generated out here on the 5th of December. Your B point is 508. So that correlation there, what do we got? It's like 400, a little over $400. That correlation will bring the A to B equals C to D down to 17,350. NASDAQ composite, same setup in the composite we have with the composite. Composite traded, we closed up 24 bucks. It was as high as 759. So the composite had been up $85. Composite couldn't handle it either, sold off. Your A point on the composite is the high, which is 48.10. Your B is that 46.74. So what you have there, you have 135 A to B structure. Your C structure is the high of today. You take 135 off that 659, so you're talking what, 630, 4610, 4630. That's going to also bring it back to the September levels. All the indices, folks, the A to B equals C to D will bring you back to the October 10th level. Now, what's really, really wild is this. On October 10th, we had closed. That's where there's also a gap. So for all the bulls out there, what you want to be looking at is that, okay, how do you come into the gap? My take is we're going to go a lot lower, but bull and bear, that level right there is going to be something that you want to look at, because realistically, you'd get a bounce out of that level anyway. You should get a bounce out of that level. Dow, we did the Dow. S&P. So the S&P, folks, this is the number that's going to be a monster number one. But what you have is that this S&P, right now, we're at 2032. A to B equals C to Z is 2,000. That's the first part. Second part gets a lot bigger, meaning it gets a lot more dangerous as to where this correction actually wants to go. And what you have is this, is that in October, the SPY, the SPX, all the above, broke its long-term trend from 13, let's call it 1,400. 1,400 S&P. That's a big number, folks. That's 600 down where we're at. We broke that with conviction. We sliced it, diced it, did everything. Wide price spread, accelerated volume, nasty. What we have here now is this. We got back inside that channel the week of the 31st of October. So what that set up is that, hey, guess what? You get back inside, you can go higher. Well, we stayed up there for 6 weeks. Small volume. The price spread was small also, but we stayed up there. This week, we come downtown once again. You come down, thus far, we've come down 50 S&P points. Now, we are right at that channel line right now. I expect what you're going to see out here tomorrow is you're going to jump the creek. Jumping the creek means that you're going to open down on the S&P. The real key is going to be, once that happens, if in fact that happens, is do you get wide price spread and accelerated volume? If that's what we get, that is going to confirm, number one, that you're going to go to the October swing lows, which is 1820, which is a couple $100 down, which is 2,000 Dow points. Number two, however, it brings the probability higher that this correction is going to take you down to 1,300. And that's going to be a shocker all around. You know, what I was talking about yesterday, though, the fact of the matter is that if you, and you don't hear about this as much, is that if we look at the oil market, well, let's go to oil right now, CLF5, because I want to show you something inside this oil market. Oil has crashed, folks. This is a genuine crash, okay? Oil has just gone from $105 to $59. That correlation, if we take that correlation and put it inside the Dow Industrials, it would be saying that in the course of 6 months rather, that was stretched at 6 months, that the Dow Industrials has just gone from 17,700 to 10,000. Yeah, it's like the $7,700 move on the way down. People would be going crazy. What is that? So first off, the oil market has done that. The oil market itself is not done going down. You know, there's no capitulation in this baby. It has been a straight line move. But what the first spot that it's going to, I suspect, get some, you know, it should get some good support is going to be at $54.62. Now, $54.62 is the highs of the low of 2008. If we get into that price point by $3 or $4, oh man, it's going to be sick. That means it's going to be $35 oil. Hey, maybe it's a brand new world that we get $35 oil. It's a crash. That's the bottom line. Now, if we go over to the XLE and we take a look at these oil and gas equities, what you have, they are going to do another leg down. They've already taken an extraordinary hit. XLE has gone from 101 down to 75. But what they've just done is set up another ABC structure on the way down. It's a smaller one, but they've set it up. ExxonMobil, we go take a look at ExxonMobil. ExxonMobil right now is building cars to blow out that October 15th swing low at 86.91. So those large integrated oils are going south. Let's go to the XLF. The banks haven't broken yet. XLF, look to me right now that we're going to see the break happen in the next 3 or 4 days. If you remember, the financials seem to always break later, but when they break, man, do they break. They take no prisoners once they break. The XLF has a high volume swing low at that $21, and right now we're at $24.62. So bottom line, if you're long and strong, get your stops in. All that can happen is you can get hit with a stop and you get your cash. Gold contract. Okay, so with the dollar high today, they still couldn't whack gold. Gold wants to go higher in a dramatic sense. We did 135,000 contracts today. Basically, you get a flat market in gold. They rejected the 1216 level on the way down. It's at 1225. The 135,000 contracts was coming into 240 and 342. This wants to go to 1256, and I expect what you're getting up there is 1347. Coming up after my show, of course, on Tuesdays and Thursdays, we got our man, Mr. Andy Hecht. And when he does the shows on Tuesdays and Thursdays, we always do an interview in either the first or second hour. We were talking a little bit about the demand side of gold. And the demand side of gold, folks, number one is there all across the world, but what you do have happening is that you got to remember something. Russia is falling apart. The rubles are falling apart. And inside that texture, not public relations, but the news events are that, yes, the Russians are buying cars hand over fist because their currency's falling apart. I suspect what they're also doing is they're buying gold hand over fist. And when I say hand over fist, the normal citizen just has to buy either half an ounce, grams. The larger players will, of course, be buying bars. Why? Because they're going to basically trying to save the currency that they're trading in. That's what it really comes down to. And their history in Russia is that, bottom line, is that you can be a billionaire one second and you're broke the next second when the ruble falls apart. And that's exactly what we have happening. Bonds. Bonds continue to want lower yield, higher price. If we go over to the 30-year, I'm just going to start with the 30-year because bottom line is that you're going to see this. It's going to be fast. It's going to be furious. It's going to be all of the above. And, right now we're at 144.06. The high of the 15th was 146.16, and bottom line, it can blow that away in a second. King dollar was up over 400 ticks today. Couldn't move the price of gold. King dollar actually had a lower low with higher volume. That's going lower. You stay right there, folks. We'll come right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go over and take a look at Adobe. Adobe just come out with numbers. Adobe closed at $69.74. That is trading up, I believe, $5 right now. She's trading at $73.39, so she's trading up $4. $73.39 or $73.39 is going to get her to test the highs once again. So we'll see where Adobe shakes out in the morning. But she's going to need a huge amount of volume to overtake that 74.69 level. The first time she hit it was in June of 2014. Hasn't been able to overtake that level since then. Inside the regulatory realm out here today, this is this business, folks, just never stops to amaze me. And what it is that over and over and over again, you hear certain parts of the press want to basically protect the banks, and they just don't stop. I mean, it's just never ending. What this one here is about. You get FINRA finds 10 Wall Street firms over analysts' IPO pitches. So if you remember in the 90s, folks, okay, what you had in the 90s is that you had an aspect that when companies go IPO, bottom line is that the analysts that work for the companies, meaning the broker-dealers, do not supposed to basically have a biased point of view. Bottom line, we know that they do, right? That happened in the 90s. You had a huge amount of fraud that was going on. You had, well, I guess one of the biggest ones was, what was the guy? In fact, Dave and I were talking about, we weren't talking about what happened with this guy, but the guy has a huge news site right now, Henry Blodgett. So Henry Blodgett in the 90s, was a huge analyst. Forgot what firm what it's for. But bottom line, he was pumping stocks to push out to the clients of the firms, and that was what he was saying publicly. Privately, what he was saying inside his emails was that the public was a joke and they were buying a piece of trash. Okay, that's what it would come down to. Well, guess what? This has happened again. So check this out. This news blurb today: Citigroup, Goldman Sachs were among 10 banks fined for failing to shield analysts from pressure to promote stocks after a decade of stocks a decade after the U.S. crackdown sought to end Wall Street conflicts of interest. The investment bank promised favorable research to Toys R Us and private equity owners in 2010 to win roles in the initial public offerings. The financial industry regulatory said in a statement today. The regulator fined the firms a total of $43.5 million. That's nothing. That's a joke. Faulting them for implicitly and explicitly making promises that their analysts would give positive coverage. 6 of the 10 firms didn't have adequate supervisory procedures in place to prevent the practice. Don't believe that for a second, folks. The bottom line, that bureaucracy inside our banking structure is inherent, that they want to look the other way. And specifically what this charge is saying is that they, before they get in the IPO, that as they're pitching the IPO, they're saying, hey, guess what? We will pump your stock up. We will tell people to buy your stock. Citigroup, Goldman Sachs, Credit Suisse, Barclays, and J.P. Morgan Chase will find $5 million each. That's a joke, too, by the way. $5 million, that's nothing. Deutsche Bank, Bank of America, Morgan Stanley, Wells Fargo are going to pay $4 million each. Needham & Company will pay $2.5 million. Guess what? Same as the no one admitted or denied wrongdoing. Bottom line, if you think things change, they don't. They don't on Wall Street, folks. You got to remember something. The foundation inside the market is to push paper out. Period. End of story. Okay, so it's just, and it never will stop. By the way, if anything has happened thus in the last 20 or 30 years, it's basically got more blatant. And now what you have is that you have the banking structure. It's part of the overhead now. That's what it really comes down to. It's absolutely part of the overhead. 877-927-6648. Let's go to the dollar. So King Dollar out here today. What did it do? King Dollar moves higher. As it moves higher, market takes off. But King Dollar actually had a lower low today with higher volume. We did 71,000 contracts in the dollar index today, and that is one monster, okay? So the low of today was 88.19. I expect you're going to get down there. Now, this is crucial for tomorrow, and this is why. All the weeklies are going to show up tomorrow. And if we bring good old King Dollar back and as to see what it has been doing, this is what you have. The continuous contract right now is at 88.59. A close under 88.51 in the King Dollar is saying this pullback is real. It's going to start in the dollar. The King Dollar, I suspect a normal pullback, folks, can bring it back to 84.24. The market itself can't stand right now a weak dollar. Every time the dollar ticks lower, market basically takes a leg lower. So it's going to be pretty wild watching this whole thing shake out. The correlation in between the dollar and gold is pretty amazing, because even with King Dollar being up those 350 to 400 ticks today, they couldn't whack gold. So we're going to see some dynamics out here in the next few days that are going to be pretty intense. What we also have is that realistically, we only have we have 6 days left of high volume trading. We have tomorrow, then we have all of next week. End of story. You have Christmas on a Wednesday, New Year's is on a Wednesday. This is where all these balance sheets are going to be basically cleaned up. What's going to be intriguing here is to see what, number one, happens inside the oil and gas sector. The reason being is that if we go take a look at the XLE, what you're going to see is that the XLE itself, whoever has owned the XLE, whoever has owned these large integrated oils for a couple of years, are in a losing position. You know, the XLE is trading at the same price that it was trading in November of 07 right now. That's how bizarre this is. Okay, it broke inside the lower range, and as we break inside the lower range, you talk about with volume. This is volume off the high. The XLE is at 75. That's saying it's going to 63. So on a tax selling basis, what you're going to have, that is something I suspect that people will sell because they don't want to pay any taxes on the amount of gains, because there's plenty of gains in this marketplace. That is what's actually even more dangerous. Why? Because if you have a portfolio that's spread across some sectors, what a smart and even investor would do is that you're selling some winners that are up good, you're selling some of the oil and gas service sectors that are down good, you're flattening out your portfolio, but you're paying zero taxes, okay? And what I expect you're going to see that come in the market, number one, and hit the market, number two. Why is it going to hit it? Because what you're going to see there is that you're going to see a lot of selling. If we go over to Apple, I expect Apple's going to be one of them. The reason being, Apple come off the high with volume. We came off down December 1st. You went from 119 to 111. Huge expansion of volume, 83 million shares. Had another expansion of volume 2 days ago to 60 million. It tried to get higher today with 41 million. That's an ABC structure on the way down. Your A point is 119, and your B is 109. So you get $10 there. That's going to bring it down to the 101 mark. So we'll see how this whole thing shakes out. But you can expect high volatility, lots of selling. It's an ABC structure on the way down. That is across all these indices, folks. You stay right there. We'll come right back.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. We had the Dow Industrials finish up 63. NASDAQ was up 24. S&Ps were, I believe they were up about 3 or 4. Right now, they're actually down 1. ESZ4. This is going to be a shocker, too, folks, okay? What you're going to end up seeing here, so we're flat right now. Actually, they're 0.75 down. The low of the close of yesterday on the futures was 2024, and we're 2025 right now. What I expect you're going to see coming into the open tomorrow is a gap lower. It's going to try to jump the creek. It was actually not a creek here. This is only a 3-day deal. This thing wants to jump in an extraordinary way and probably run to 2001. Now, what I expect you're going to, there's always something, folks. There's always something that makes these events happen. In this case, I got a feeling what it is that it's going to have to do with the fact that as of this afternoon, we have no budget. So the bottom line is that what was supposed to happen today is that we were supposed to be able to, the Republicans and Democrats were supposed to be able to get together and pass a $1.1 trillion federal spending bill. Now, all that funding, the funding expires today. These guys and ladies are a joke, okay? Because the bottom line is that, talk about going to the last minute. When we woke up this morning, it looked like, everyone was saying that no one wants the government shutdown, right? Well, bottom line, as of this afternoon, as of right now, bottom line is that there's not enough votes to get through what evidently, I'm not sure whether it was, a couple committees that said, okay, we think we can get this thing done. The bottom line is that the funding, as of right now, they don't have any funding. So we'll see whether this is going to be just another government shutdown. And if that's the case, that's going to be a problem ASAP. Because it's a perceptional problem. That's what it is more than anything. I don't see it as a huge problem because we know that there's going to be money and it's going to be there. What you will get, though, is you get the uncertainty that's in the marketplace, and the market just needs something to sell off to. That's kind of how this is shaken out. we've gone to higher highs. You've had lighter volume. You come off the highs with volume. You come back up, hit the highs again. They sucked everyone else in the last few weeks. After the October 15th downdraft, bring them in again. Take them and flush them down the toilet. It's going to be pretty sad to watch how this baby's going to shake out. And we'll see what the cause is going to be selling, period. But the event that will take place very well could be the government basically saying they're running out of money. What we will actually get, if in fact that's the case by the end of tonight, what you'll see is that the Treasury will transfer some money from somewhere. They always have money that they can transfer for a short period of time to keep everything going. What I suspect everyone's going to get out of that, though, is that here we go. This is going to be a bloodbath because we have a transfer of power that's taken place January 9th, I believe. And inside that transfer of power, if we're starting a bloodbath before the transfer of power inside the Senate, that's going to be a larger bloodbath as we move along. So right now there's some strength. It's not a huge downdraft right now as these futures are open, but what we just did is that we are breaking into those lows. And that's with if we look at Adobe come out across with some decent numbers. Adobe's trading up $4 right now. Now it's up $5. That high on Adobe also, though, has a high volume high. And it had been tested a few different times, haven't been able to make it over that high volume high. What you want to be watching in spades, let's go to J.P. Morgan, because it's going to be the banking structure, folks. If you remember, the banking structure itself takes a long time to break, and it hasn't broken down yet. It looks to me, though, that J.P. Morgan Chase is an ABC structure on the way down. If, in fact, that's what you have, that J.P. Morgan wants to run to 54 and you're at 61. Listen, if J.P. Morgan's going to run lower, that's a big bank, solid bank. They know what they're doing. It's been a leader out there for years. That is a problem for all the banks. That's how this thing is shaking out. And what is screaming out here for J.P. Morgan is that $54 level. That is on the, let's see, if we put this on a quarterly basis, what's actually screaming, it's not that bad, $50. $50. J.P. Morgan's been in a consolidation now for 15 years. It pays a 2.6% dividend, so folks have been getting paid a small dividend inside of that. Some of the high volume stocks today, and by the way, we did have a low volume market, but what you have, these are the high volume stocks in a low volume market. You had Staples was up $1.28. There's a private equity fund that looks like they want to go after Staples. Lending Club Corporation went public today. That traded up $8. That's at $23.43. You had Facebook up $1.55. eBay was up $1.55. Let's go over to eBay. What eBay is doing, folks, is that they're going to spin off PayPal. What they come out across with last night is that they think they're going to get rid of 3,000 people inside one of the divisions. I suspect, basically they're cutting to cut expenses so that when they do push out PayPal, the numbers are going to go up dramatically. What you want to understand on IPOs, folks, so the way that Wall Street gets IPOs ready, and any good CEO that understands how to go public, what you do is this. You get a huge amount of money first, right? You spend a huge amount of money basically getting all your processes in place, your company in place. Then what you do is that you spend a huge amount of money marketing, because what ends up happening, that marketing has to be done because you need growth. If you're going to do an IPO, you need accelerated growth at least 6 to 9 months before that IPO is happening. The broker-dealer community, the banking community is selling the public, the hedge funds, the institutions, they're selling that growth. They seem to discount the expense ratio that it takes to get that growth. That's how IPOs get pushed off. Then what ends up happening once that IPO comes off, of course, is that the company itself has a good amount of money. And the key at that particular point, are they going to use that money correctly for more growth? Or are they just going to burn through cash and basically fire it up and burn up the company? There's a company in Norway that it's a pretty incredible story. The company basically went public, big money, and went from public to bankrupt in about 4 months. And what that was all about, it was an oil company, and they basically, number one, gave oil out on credit to the wrong person, and then what they did is they tried to hedge that, and they basically were continually sell the wrong side of the oil market. And you know, those stories are absolutely insane, but guess what? It happened in spades. We go take a look at Walmart. We had Walmart out here. Walmart has been powering higher. The high that was generated is 88. Right now we're at 83. This is also setting up a small ABC down. This is going to just go fill the gap. So we'll see how that gap gets filled at the $79.65 price point. As you're over at TFNN, what you're going to see on the front page is you're going to see 60 for $600. That's the gold report, folks. I'm doing the 660th edition this coming Tuesday. That's 12 and a half years of the gold report. It blows my mind, man, I'm telling you. You know, it's really weird. Fast forward another 12 and a half years. That's a trip. I remember exactly where I was sitting when I did the first gold report. I want to say a great hi to my man, Mr. Dale Petz, up in New Hampshire. He was helping me. It was a Saturday afternoon, and oh my God, it was like 100 degrees in Florida. And I'm going through all these charts. Dale's helping me because he's a great designer. He's a great software designer, period. He designs manufacturing plants, I think. That's what his specialty is. Bottom line, he was helping me in a dramatic way. And we had a lot of fun, number one, but it's pretty cool remembering back that far. And gold, by then, at that point, folks, was at $282.50. Pretty sick. Unreal. Anyway, we've done this once before. It's a great sale. If you happen to want to be in the metal market, if you're in the metal market right now, if you have Tiger dollars, you have 6 days. This sale's over in 6 days. 7 days. 7 days. Yeah, 7 days, I believe. So you get 60 editions for $600. What you'll also get is that you're going to get the Art of Time in the Trade, the Ultimate Trading Mastery System, my book. That's an $88 value. So you not only save the money, you're going to get the book. It's going to be an autographed book. And we just got a whole, we just did the second printing, folks. We ran out of the first printing, and I do want to thank all you tigers and tigresses out there for selling it out. The bottom line, we just got the second printing. So you go to the front page of TFNN if you want to take advantage of that. This is Tom O'Brien. This is TFNN. You stay right there. We'll come right back. Dow Industrials up 63. NASDAQ up 24. S&P's flat. We're going to be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial. Tom O'Brien's daily market letter. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. Don't forget, folks, at TFNN we do 10 hours of live programming every trading day. Get it right on your cell phone, tfnn.mobi, if you'd like to get the audio. If you want to get the video, folks, that's Tiger TV. Just go to tfnn.com. Hit Tiger TV on the right-hand, top right-hand. You'll get the audio, video, all the charts, the whole ball of wax. And we do have a new, it's fully HD. It's really cool, folks. If you've ever watched it, the charts just pop beyond belief. And I do want to thank my whole staff. They've been working hard at this for quite a while. We really, it's a great system, number one. The charts pop in an extraordinary way. And, of course, if you happen to see, we can do interviews right now, and we can bring in we can actually bring in two separate guests on video simultaneously, which is really cool. Man, Mr. Andy Hecht's going to be coming up next, and he is also on Tiger TV now. You're going to see his bright face, and you can throw some dots at it. It's a beautiful thing, Andy. Okay, so let's travel around the world for a second, okay? What we did have is this. Last night, all of Asia was down. If we go over to the Shanghai first, the Shanghai was down 5% 2 nights prior. Last night, what you had, basically bounces, and this is going to be intriguing to watch to see. Yeah, and it's a bounce on lighter volume. Someone who nailed this in an extraordinary way is our man, Mr. David White. When Dave and I were doing the show on Friday, David saying to me, hey, you see the Shanghai? You see the Shanghai? I said, yeah, I've been watching it, And David said, man, I think that thing's ready to crack, And I said, well, I kind of like what it looks like, And bottom line is that, what I was, saying is that, listen, Shanghai can get to 34.54. That's the high of July of 09. Bottom line, it got up to 3,000, But you want to watch the pullback. Bottom line, he nailed that in an extraordinary way. We go to Hang Seng. Let's go. We take a look at the Hang Seng out here. So, Hang Seng last night was down 0.9%. And the way the Hang Seng is set up right now, that is going right after the October 15th swing low. These are October 15th swing lows, folks. Hang Seng is at 23. Oh, this is cool. So check this out. 23. Okay. So here's a correlation, and it brings the probability much higher that that's where we're going ASAP. The Hang Seng, folks, got down to the October 15th high, October 3rd high last night. That's going to go into it. We go to the FTSE. We go over to the UK. We have with the UK out here. UK was down $38 today. And what we're going to see is you're going to see the FTSE hit it before we hit it. The high of the 15th is 62.82. We're at 64.61. I suspect this will be down again tomorrow. That wants to hit it. We go to the DAX in Germany. We take a look at the DAX in Germany. DAX in Germany was up today, and the DAX in Germany is at 9,800, and that low out there is 86. So you're going to see some heavy volatility across all indices across the world, folks. And I suspect what that's going to be, the amount of volatility inside the currencies are getting pretty intense. Oil's going to be a big factor. And what very well may be happening here, the oil market is huge, number one, folks, but there may be plenty of folks that more than likely are on the wrong side of this oil trade, because who would ever thought that oil can go from 105 to 59 in 4 months? And this is not stopping. After our own market closed at 4 o'clock, oil has taken another dive. At 4 o'clock, what do we have? Yeah, at 4 o'clock, we're trading out there at 59.87. Now you're at 59.32. 55, 54 bucks is game in that oil market. And if you get into that $54, let's say you go to 52, forget it then. You go to 52, you go to 35. The reason being is there's nothing in between that level. Between that level, you're going to hear basically coughing up. People are going to be spitting out. It's going to be a bad scene. It already is a bad scene, okay, if in fact you're into that market. It is certainly not a bad scene for all of us as consumers, because what did happen this time, which did not happen, I don't remember it happening specifically in 2007, or either that or basically 2007 everyone's broke, so you didn't pay attention to it as much, is that the prices at the pumps have gone down dramatically. 2007, I think it probably came down too fast and went back up too fast in order to get that type of break inside your pocketbook. If we go over to the gas market, right now you get unleaded gas trading at 163. That also is going to go dramatically lower. We're going to see unleaded gas, regular unleaded gas, folks, in the marketplace under $2 all over the place. The way that the gas is set up right now, let me just see this. XB, this is going to be, we're going to have some cheap gasoline, man. Everyone's going to be buying those big SUVs. Okay, so I bring this back 10 years. Right now, yeah, we're going to, here. The actual gas market may very well give us a big indication if, in fact, the crude oil is going to go to the bottom. Because we're at 162. At 158, if it gets into 158, it goes lower than 158, that would set up like a 98-cent gas market. That would be crazy. That would be absolutely crazy. Unbelievable. Now, you stay right there, folks, because our commodity expert at TFNN is going to be coming up next. Our man, Mr. Andy Hecht. he's going to be growling and prowling with you. And, of course, don't forget, if you can't get us, if you're listening on one of these radio stations across the country, well, you can always get us 24 hours a day right in your cell phone, folks. It comes in great. It's TFNN.MOBI for the audio. Want to get the video? Just go to TFNN.com. And what you do is you're going to hit the TV on the right-hand side. You get the audio. You get the video. ABC structures on the way down. They're all over the place, folks, okay? We hit the A to B. We came down on volume. The B to C was laid out there today. You had the Dow up over 200 points, gave it up, only up 63. NASDAQ was up over 85, only up 24. S&Ps, not sure how much the S&P was. Let me see. So the SPX got to a price point today of 55, yeah, and gave it up. So the S&Ps were up 29 bucks and only ended up being up $9. In all those cases, folks, you had light volume, intraday, light volume on the daily. That sets up the ABC structure. The price points for the price projections would be the highs of September. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right here tomorrow. You stay tuned right there. Our man, Mr. Andy Heck, is coming right up. Go get him, folks.